Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really exciting one for you. We're going to be comparing all of the top Bitcoin miners for the month of June. We've got Anthony Power, who's a special guest. He's a self-proclaimed Bitcoin mining analyst and one of the top experts in this space. We're going to be dissecting these charts, going over last month's results, and talking about our findings. Now, before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below which of these miners you're holding, what you thought about June results, and what your thoughts are on Bitcoin price for the back half of 2023. Now, with that being said, let's get into today's video. Okay guys, so that's right. We've got Anthony Power, who's back to talk about June mining and production results. Anthony puts together a very comprehensive chart and comparison analysis each month of the top miners, and we wanted to have him back on the channel to talk about his analysis. So Anthony, thanks so much for being here. We really appreciate your time.
Thanks for having me, Brian. It's great to be here.
Now, Anthony, for those of us who maybe missed your initial interview, what is your actual background? I know you're a chartered financial accountant, self-proclaimed Bitcoin analyst. How did you get into this space?
Got into this space during COVID, and when we couldn't do very much at all, I started a small investment in some of the UK finance stocks. And then, I did a speculative investment in a company called Marathon Digital back in late 2020, and the share price within 3 or 4 weeks had 4x'd, and I didn't know what I was doing. So I had to start thinking, hey, these banking stocks are sort of like very flat. This Marathon Digital company has gone ballistic, and I need to understand what they do really. I knew a little bit about Bitcoin. I didn't know anything about Bitcoin mining, so I started to do some research, and I was quickly following a chap called Blonity on YouTube, and we became friends. And then about literally getting on for a year from that time I bought Marathon stock, I opened my Twitter account and started doing some very basic analysis, a few tables on about 3 or 4 of the miners, and it sort of grew from there, and that was just over about 18 months ago. So it's come a long way since then. Now the tables I'm doing now are far more detailed, include a lot more metrics, and yeah, I think people seem to enjoy them, and that keeps me going in this space.
Yeah, I would say people definitely enjoy them. Anthony's Twitter handle, Casanova_UK, is just in the screen here. It's also linked in the video description, you guys. We were just talking about this off screen. Anthony's tweets are getting 10-15,000 views now, which is crazy. Crazy to see the growth. Obviously, there's a big appetite for this, and I would agree your charts have come a long way. So we've got 3 charts to talk about today. We're pretty excited. Anthony, why don't we kick it off with the rank by utilization? So tell us a little bit about this chart, and what does it really mean for viewers that are looking at this data?
So the rank by utilization is effectively understanding what the expectations for a miner to mine with a certain amount of hash rate. So we know that miners often during the months, especially these warm months of the year now, and those that are mining in Texas will know exactly what I mean. They're curtailing on a regular basis throughout every day, literally. So the utilization would be if a miner was able to achieve the maximum amount of Bitcoin, what would that look like? 100%. And so the utilization is how much of that 100% of these miners getting close to. And so the likes of Iris Energy and Bitfarms and CleanSpark and DMG, these are these are the companies that are doing quite well this month. But if I look at the last sort of 12 months, there's been 4 miners that really dominated the performance and utilization charts, and that's Hive Blockchain, Bitfarms, Iris Energy, and CleanSpark, and they intermingle each other on a monthly basis. So it's all very close. You won't get much more than 1 or 2% between them, and then you'll see some of the other miners come through, like Cipher Mining, And then towards the end, you've got the likes of, Hut have been having a challenging time because they've got quite a few issues at the moment. They've got a dispute with their energy provider in Ontario, which I think they're now moving out of. They've also had some significant electrical issues at their Drumheller site. And, I think for the month of June, they produced 120 Bitcoin, which was probably, about half of what the expectations if they'd been operating fully. So challenging times for them, but they are going through the process at the moment of going through the merger with US BTC, and that's going through all the regulatory approval at the first, and then the shareholders will have their say. And I believe, sort of from a timetable perspective, probably 1 to 2 months' time, we'll probably see that merger occur. Interestingly, I mean, with all these miners in the last few weeks, we've seen the performance of their share prices extrapolate greater than the Bitcoin price. I mean, this is where, we talked on the last podcast about having an investment that is correlated with Bitcoin and easy to access. And so, when Bitcoin rises, the miners rise, and when Bitcoin falls, the mining shares fall. And they are a good proxy investment, but the volatility this last few weeks, and even these last few days, of some of these miners has been sort of repeating what happened in 2021 when we saw the charts literally explode for all these miners during that period. Some before Bitcoin reached its all-time high, and some after Bitcoin reached its all-time high. And we're starting to see that sort of trend again. Whether it's now people are more, they've done more research, and they're sort of like the market has started to understand a little bit more about mining stocks, because I'll be honest, I look at some of the valuations and they don't seem to be correlated as I would expect them, based on what the companies are doing, what they're mining, what their debt positions are. So some companies are having a real bonus time at the moment. It's interesting times. But if I look at the last sort of month, most of these miners have increased by 3 digits.
Yeah.
In terms of percentage, that's a significant. And if we go back to year to date, you'd be looking at 300, 400, 500%, or if you call Scientific, over 1,000% this year. Now, I don't want to say Core Scientific is the greatest miner. It's one of the biggest operating miners with a hash rate of 15 exahash, and it has about 6 or 7 exahash in hosted miners, so over 20 exahash under its management. It went into Chapter 11 late in 2022, and we're starting to see some green shoots coming out of those discussions, and it looks like they may be coming out of Chapter 11, having had some agreements with the creditors. But their share price reached an all-time low of single-digit cents back in December, January, and we see today or certainly closed yesterday, it was $1 a share. Now, that to go from 4 or 5 cents to $1 in sort of 6-7 months, those that were sort of took that gamble, good luck to them. But I don't think there was many that did that, because a share price that was in its $10 to $20 a share, not too within just over a year ago, got down to 4 cents. I don't think any of us would be seeing any sort of way we'd be investing money into a stock that drops 99.9% of its share value.
Yeah.
But they've had a great run, and that's what can happen in the Bitcoin mining space. It's not only Core Scientific. We're seeing this week Stronghold Mining having a phenomenal run as well. Greenwich Mining having a fantastic run this week. But a lot of the miners that are in my tables, I'm going to say now, the majority of them, we're talking more than 200, 300, 400% of increase this year, and in the last month at least 100% up. But
yeah, it's been really incredible. I know TeraWulf was up like 20% yesterday, and you're right, Anthony. It's starting to. Sue Ennis from Hut 8 always talks about how Bitcoin miners are a call option on Bitcoin. But what's interesting for me is I'm starting to see we'll have days where Bitcoin is down or trading flat, but all the miners are up. And I'm starting to think, yes, to your point, people have researched and understand it. I'm really starting to feel like institutional investors are coming in. I saw a report saying Institutional investors hold about 10% of Marathon now. So it's quite interesting, and I think we're starting to see some big money flows, which is obviously great for any of us retail investors who've been waiting and patient in the space here. The other thing you mentioned, Anthony, is some of Hut 8's challenges. So I know Drumheller site not great right now. They were supposed to close the US Bitcoin deal in Q2. Sue said it'll probably be Q3. So they're definitely treading a little water. They do still have over 9,000 Bitcoin in their reserve, which is kind of why I'm still excited about them. But I did want to just on the chart. So we have Hive in first place for utilization, Riot in last place. We had Jason Less from Riot on the channel last month. And that's the Texas curtailments in action, eh?
Yeah, let me pick up on the Riot, because Riot is an exceptional story in June alone. So Riot finished, I think, bottom of both metrics, bottom by production in terms of production by exahash, and bottom by utilization. But what Riot has that not many villain miners has, it has an agreement in Texas, a fixed agreement for its energy. And therefore, having that fixed agreement, and it's purchased some hedges against the energy, or purchase some blocks of energy, and these are hedged against the price of electricity. It enables them to do a number of things. It enables them to sell power back to the grid when power gets really expensive, so they can switch off the miners, and when it becomes more profitable for them, they can sell that energy back to the grid and receive a payment for that. They can also curtail when ERCOT requests them to, so they're part of the 4CP package, which means during the months of June, July, August, and September, miners are required to curtail for the higher energy consumption periods, and it'd be small amounts each day, but it might be quite a significant time per month of doing that, and they are forewarned about it. But what that does is it gives them some benefits as well in terms of reducing their energy fee going forward and the energy bill that they're having in month.
So I saw, you're right, they sold about, I think, $10 million they generated from power sales last month, which is great. One viewer, and I'm curious to know if you have any idea of a ballpark here, one viewer had a good question. They said, hey, that's great. Well, the price of Bitcoin is low and you're able to offset. What happens if Bitcoin jumps up to 50, 80, 100 grand? Then it's not going to be profitable to do that. Do you have any kind of indication of what absolutely level Bitcoin needs to be at to break even on the power?
They will look at the strategy from a profitability. So if it's more profitable to curtail, and I've already explained they have a fixed agreement, so they can run their machines 24/7.
So optional curtailment.
They've got a fixed power agreement up to 345 megawatts of power. They can run those round the clock. So that will cover all their self-mining and some at the moment at the Windstone site. But they choose to curtail when it's more beneficial, that the power the energy credits that they receive back are more beneficial than what they receive from mining. So if you look at what, if we convert that 10 million into Bitcoin equivalent, looking at the average price in June, that would equate to 361 Bitcoin. If you add that to their total and then put that number through the metrics that I've done today, Riot finished top of utilization and of production.
Okay, and I think that's an important distinction to call out here, you guys. Yeah. So definitely Riot a little more than meets the eye. Now, you just talked about Bitcoin production per exahash. This, I want to say, Anthony, this is your metric. You've come up with this one. So tell us a little bit about what exahash per Bitcoin means, or Bitcoin per exahash, sorry, and what were the findings from June?
So again, this what looks so every miner will mine in a number of exahash. So if we look at, say, the likes of Bitfarms, who have got an operational hash rate of about 5 exahash. When you're comparing, say, Bitfarms and Marathon Digital, who've got 16.7 hash rate, you need something to make it easy to compare the numbers. So the metric I've used, and believe you me, this is used by all the miners as well. So I'm not, it's not, to say it's my metric, I might have introduced it on Twitter, like say 18 months ago, a little bit longer than that. All these miners every month do that metric and compare their performance with all the other miners. Believe you me, I've spoken to enough CEOs to understand that. But what the way it compares, if we take if we had every miner based on their current production, what would they have mined if they only had 1 exahash of Bitcoin based on what they produced? Those are the numbers that they would have produced. And so, Bitfarms came out top. I think it's 77 Bitcoin per exahash. And again, the normal Hive, Iris Energy, CleanSpark are all in that group as well. So sometimes the charts are writing themselves in a month. I don't really have to change too much.
Sure.
Those 4 companies are constantly, they're extremely obviously competitive with each other, but they are consistently producing those numbers. In 18 months, I think each of the companies might have had one blip, but 95% of the time they are producing within about 1 or 2% of each other. And if you look at, say, CleanSpark produce great numbers every month. They utilize a little bit of immersion cooling in their hash rate. Not a big amount, but a significant amount. Maybe an exahash of their 6.7 is with immersion cooling. But what we don't know is the numbers that whether they're able to overclock their machines and bring in a little bit more Bitcoin. So some miners using immersion cooling might be able to curtail, but when they are mining, mine more and get some of that Bitcoin back. So until we see a miner come out and say, this is what we're achieving using immersion cooling, and we haven't had that yet in sort of over 12 months. So Riot and Argo blockchain, the biggest users of immersion cooling in my tables, both of them have got something like 200 megawatts of immersion cooling for their miners, but we've had no data whatsoever from either of them. And right at the moment aren't able to use most of their immersion because of the damage from December last year. So we're in July now. They're waiting for parts from the UK to arrive and get those facilities back up and running 100%, get them back to 12.5 exahash.
And you're talking about Building G there for Riot, right?
Building G, I think Building S is up and running, and Building G is still needing some parts from the UK. But I mean, these must be long lead times for parts because, I'm getting questions, on Twitter saying, why is it taking so long? I've spoken to Jason recently, and, they're just on a long lead time. They're doing everything they can to get them here quicker. And it's just an issue from their point at the moment. The revenue they're losing would be quite significant from those 2 facilities from the last. I did a calculation a while back, and it was in the millions per month.
Oh, definitely. Yeah, I've had quite a few questions too, saying what are they waiting on? How does it take that they could build a whole new building in this time? So,
one positive news on Riot is they announced during the month of June that they made a significant purchase of machines, and so they've got another 7.6 exahash coming over the next 12 months to go into their new facility in Corsicana in Navarro County, Texas. And they've bought those at a very, very competitive price. And aside to that, they've actually got the potential to order an additional 15 exahash at the same price should they require it. And we know already that Corsicana is going to be the first gigawatt mining site. And so there is plenty of potential for those machines, all 22 exahash, to go into that site as and when it starts becoming operational. So we expect the site to start being operational towards the end of 2023. And then as the miners arrive, literally from like end of December all the way through to June of 2024, they'll be up to sort of over 20 exahash. And we've seen some of these sites, once they start growing in size, that they can grow quite quickly. And if we look at sort of Iris Energy with the Childress site, what started out as 20 megawatts is now becoming 100 megawatts very, very quickly. And they've got potentially 600 megawatts of power there. So, these sites can be built out. It sort of seems slow to start with, but once they get the movement on there, they can be quick. And believe you me, these companies want to be quick because, their senior management will be getting rewards based on how they perform from not just a financial perspective, but how they perform operationally. So, for a miner, the key thing is getting to hash rate. So CleanSpark have rallied over the last 18 months to get to where they are. they're going to be, 16 exahash by the end of the year. Riot blockchain this time next year will be over 20. Marathon Digital will be probably edging towards 30 by this time next year, maybe. They're going to get to 23 exahash, in the next month or so, looking at the numbers where they are now. And we know that Fred Thiel doesn't stay, keeps his eye on what the next venture is. So they've already sort of like started to utilize the opportunities in the UAE, and he has other options to move into other Middle East countries as well. So everything seems rosy for Marathon Digital as well at the moment. But yeah,
sure,
it's all in the space. We're all happy. Yeah.
Yeah, you're right. Some of these campuses, we were looking at Riots last month, and they look like a Tesla gigafactory or something out there in the desert. So, okay, so that's great. That's the second chart, Bitcoin per exahash. Now, obviously, the big one is total Bitcoin production. So we have Marathon in first, CleanSpark, to your point, in second place. Any kind of standouts? I know Hut 8 with 120 was...
Yeah, we've covered Hut 8, and I don't really want to, keep on that one there, that they've got a great hodl, and we hopefully will see the merger. That merger is going to be interesting. I mean, when they were talking about merger, I think the valuation of Hut at the time was just under $500 million, and if we look today, Hut's valuation is over 800 million. So that's grown significantly, and I don't know if does USBTC, who effectively going to be half the company, has their valuation grown in the same sort of way, or are there any ramifications if one company's growth before merger excels the other one? I don't know how that works, but somebody might benefit more than the other one at the moment.
That's a really interesting point, and that's one I thought about, because you're right. At the onset, it was 500 million. Let's get together for $1 billion. They were going to balance out their share counts, but you're right. U.S. Bitcoin is more of an infrastructure play. Hut 8 has their big Bitcoin reserve. That's appreciated way more rapidly than US BTC. So I don't know, Anthony, how to feel about that, but it's a good call out for sure. And then to bring us home here, I wanted to save the best for last. So we've got your full June comparison or table here. This has a number of different metrics. So you have their total HODL reserve in there. You've got their exahash, their capacity, their month-over-month mining and growth. Where should viewers be looking here, Anthony? What are the big kind of stories in your main table here?
So if we look at where we are now, say from a year ago, what's looking at the right strategy now is miners are selling a proportion of their production. So of those 11 miners, yes, TeraWulf and Iris Energy sell their Bitcoin. Iris definitely on a daily basis, and TeraWulf don't have a hodl, so we can assume they sell their Bitcoin fairly quickly as well. And that is one strategy, and Iris Energy will probably fly the flag on saying they adopted a better strategy as the Bitcoin price fell. They were selling all the way down, whereas we saw Bitfarms sell 3,000 Bitcoin in June last year when it was like bottoming out. And they'd actually paid for some of that Bitcoin a lot more than they sold it for. So that wasn't a great strategy. But what we're seeing now is the strategy is, if they're mining, say, 400 or 500 Bitcoin, they'll sell a proportion of that. And then some of these miners are slowly increasing their hodl in readiness for going through the next halving. Mm-hmm. What we know from the next halving is that the cost to mine a Bitcoin will double overnight. And it will overnight, because the rewards you receive will be half of what you're getting now. So, if it costs, a mining company, say 15,000 of cost to mine a Bitcoin, effectively that will feel like 30,000 come the halving, because the rewards will just not be there to compensate them for it.
And that's why you guys, the efficiency metrics are so important. The Bitcoin per exahash, because it's going to be progressively more difficult to obtain these Bitcoin, more expensive. Network difficulties going up. So you want to make sure you're investing in companies and machines that have a high efficiency. So I just wanted to throw that in, Anthony.
You want high efficiency machines. So CleanSpark, Marathon Digital, Riot, Iris Energy will certainly top the charts on those metrics. You want the cheapest energy cost. And we know the likes of TeraWulf, Cipher, Riot Blockchain are certainly the leaders in that space. If you can get a combination of both of those, you're going to be in a good position going forward. because it is about, it is a case of, you have to pay the energy cost, you have to pay your staff. So all those cash costs that we see in the accounts, and there are so many non-cash costs in the accounts. I don't look at the non-cash costs. I don't look at the difference in valuation of BTC or any investments that go up or down, etc. I'm looking at the cash costs. I'm looking at salaries. I'm looking at G&A costs. I'm ignoring stock compensation, although I do keep an eye on stock compensation for other reasons. I want to make sure that the miners are not over-rewarding themselves at the expense of shareholders, because stock compensation is a direct dilution to the company. Energy cost is really, really important. So if you look at every halving, the energy price will effectively seem like it's doubling. So, every 4 years, your energy price doubles. Yes, there's a hope from the past. We looked at the cycles of Bitcoin, that the Bitcoin price has risen, but it hasn't risen straight from the halving. Sometimes it takes 4 or 5 months for it to start kicking in. So these miners have got to start thinking, we've got to try and be as lean as possible. We've got to try and get the best energy deal, and we are seeing energy prices coming down across the globe now, a lot lower than they were a year ago. We're going to see miners try to probably, as we get into sort of like the autumn this year, not in the hot periods now where you won't get a PPA, a fixed price agreement, because it'll be so expensive to do it now with the power usage at the moment. We're seeing massive curtailment in Texas. So to go to Texas and say, I'd like a PPA in July, that'd be music to their ears. If you go in October, when the demand requirements are a lot less, it's not as cold as winter, it's not as hot as summer, so the usage is lower, you've got more of an opportunity, or maybe spring next year, just before the halving, get a PPA agreement in place, and benefit from that PPA. We all have, most of us have fixed mortgages. We like to know what we're paying every month. We don't want to be in a volatile where I'm paying, 10,000 this month and I'm paying 20,000 next month. And if we look at the TeraWulf update, TeraWulf's update was interesting. In June, their energy price per coin increased compared to May. So in May, the energy price was around 6,250 per coin, which was the best price of all the miners. But in June, that energy price increased. So what it shows then is part of TeraWulf's energy comes from a market where they're having to pay some sort of market price. We know they've got a very good nuclear deal at 2 cents a kilowatt hour for, I think I'm going to say about half of their hash rate, but the other half of the hash rate is non-nuclear, and they're probably having to pay a sort of like a more market price. Still a low price compared to other miners, but it was noticeably a bit of an increase compared to the previous month. And if they do put their energy price on every update, so you can see, I might sort of do a graph of these just to show you how things can change and compare that to the Bitcoin price, just to see if there's any correlation with the energy and the Bitcoin price. Maybe do that as a sort of like for the next time we speak, something like that.
Gotcha.
But, it's all about energy. It's all about efficiency, and it's making sure your G&A costs are down as well. So, if you want to pay your CEOs and directors millions and millions of dollars a year, that's got to be found somewhere. And when the Bitcoin rewards don't come in as you expect them to from, say, April, May next year at the halving, that's something to bear in mind. So some miners, the G&A costs are quite excessive, and I've done a lot of information which I'm going to be putting in some articles in the next month or so, looking at the cost to mine a Bitcoin from a cash perspective. I've got the data now on about 11 of the miners, and it's quite interesting reading. The lowest miner only cost 13,000 to produce a Bitcoin total cost, and the one at the other end was 36,000.
Are you able to give us names?
Not at the moment. I'll release that.
Hey, and another note for you guys before we wrap up. Anthony's working on getting a Patreon and Discord put together, so I'll make sure I let everyone know in our next update. 2 thoughts there, Anthony, before we wrap up. So number 1, excellent work as normal. This is amazing data. It's definitely out there, but there's so much. It's so hard to find and capture and get in a timely manner. So we really appreciate this. I saw an interesting quote the other day on Twitter saying Bitcoin is taking physical energy costs and turning it into digital value, which was kind of an interesting interface. And to end things off, Anthony, one word. I'm curious to see, and we'll do a little game here, your top pick for the upcoming month. So mine's going to be Bitfarms. They're trading just north of $1 now. I think they're going to have a big month. What would you say right now at this point in time is your top pick?
CleanSpark.
CleanSpark. Okay, so next month when we do this video, we'll do a little comparative, see which one of us did better. Anthony, thanks so much for your time. Congrats to all your success on Twitter. Again, you guys, the handle is linked above and in the video description. We really appreciate your analysis. We appreciate everything you're doing for the space. Thanks so much for being here.
Thanks very much, Bryce.
Have a great day, you guys. Thank you.